days. And Brent, like we said, capex seems to be the catalyst for why shares are moving to the downside here. But these hyperscalers, they're not going to stop spending on AI, right? So as an investor, how do you assess how much is too much? Is it spending relative to revenue, spending relative to free cash flow? What are you looking at there?
Yeah, I think just tech is down today, not necessarily on the results, but it's on the clearing of the deck ahead of next week. Number of big macro things that are going on with the election and the Fed meeting. So what we're seeing on our desk is not necessarily fear of Microsoft or not a massive miss. It's more a broader issue that's going on. So just set the stage. But you're right on capex. That is the central focus. But I think when you start to see the type of returns we're seeing in all the hyperscalers, if you look at the capex invested to their backlog or bookings, they're equal, if not bigger, on the booking number. So that means more business is coming in than they're spending. When you start to look at some of the AI numbers now, you can start to measure like real revenue, right? Microsoft said $10 billion of revenue, fastest business to $10 billion in the company's history. We're early in the innings of this. So I think investors got to step back. It is the number one question. You're asking the right question. But I do think that there are effectively proxies and past history statements that elements that have shown that when Microsoft spent on Azure, was that a good return? When they spent on the server business, was that a good return? And even when Zuckerberg, 5-6 years ago, was in Congress, and they came out a couple years after and said, "Hey, we're going to spend." That was the right thing to do and spend, and the stock is higher. So I think we use historic context. We use kind of current frameworks. We're seeing already all these hyperscaler backlogs. The growth rates and the cumulative revenue exceed that of the AI capex investments. Now, not all these investments are broken on AI, but we've looked at it a lot of different ways. And also, like, you have Nvidia and Microsoft at 30 times earnings. They're not 30 times revenue like Palantir. That's unsustainable. Okay, these are multiples that aren't crazy. So again, for Meta, you can get $30 of earnings power, put a 25 multiple on it, and have a way higher stock price from here.
And
so I understand.
Go ahead, Brett. Sorry.
We think we have a good answer.
Even though the most well-known tech businesses were purchased by Two Sigma's most brilliant investment minds, including John Overdeck and David Siegel during the June-ended quarter, their acquisition of the industry titan of artificial intelligence, AI, Nvidia, stands out. Over half a dozen billionaire money managers cut their separate fund holdings in Nvidia during the second quarter. However, only a small number of billionaire investors increased their stake. In the second quarter, Overdeck and Siegel managed the acquisition of 534,842 Nvidia shares, increasing Two Sigma's stake by 39% compared to the quarter that ended in March. Nvidia's early-stage monopoly of AI graphics processing units, GPUs, is the likely driving force behind Two Sigma's substantial acquisition and the explanation for the company's more than $3 trillion increase in market value since the beginning of 2023. According to Tech Insight's semiconductor analysts, 98% of the GPUs sold to enterprise data centers in 2022 and 2023 were from Nvidia. Nvidia doesn't seem to be giving up its monopoly-like market share anytime soon, as orders for its replacement Blackwell chip and H100 GPU, sometimes referred to as the Hopper, are backlogged. There are benefits to having its iGPUs be the go-to option for companies looking to run AI-accelerated data centers. Most significantly, Nvidia has managed to charge between $30,000 and $40,000 for its Hopper processor, which is 100% to 300% more expensive than competing AI GPUs. The company's gross margin has increased due to its ability to command a higher price point with little decline in demand. Additionally, Nvidia's QDA software platform has performed admirably in enhancing its hardware and retaining users within its ecosystem. The toolbox used by developers to optimize the processing power of their Nvidia GPUs and train massive language models is called QDA. However, as I have recently observed, Nvidia's historic rise might not be sustainable. For the past 30 years and counting, every next big thing invention and technology has needed time to develop and has experienced an early stage bubble. It would seem that investors have once again underestimated the early adoption and usability of a new technology, artificial intelligence, especially as most firms do not have a clear plan for how they will monetize and earn a positive return on their AI investments. Going future, Nvidia won't be the only vendor offering AI GPUs for enterprise data centers. Lower pricing points from external competitors combined with quickly increasing internal rivalry could lessen AI GPU scarcity and have a detrimental effect on Nvidia's price power, even if it maintains its computational advantage. However, during the June end quarter, Overdeck, Siegel, and their investment team were sending shares of a Warren Buffett favorite on the chopping block while they were busy investing in Nvidia. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
What's happening?
And Brent, so for Meta specifically, how is AI already impacting the business? Walk us through what's already showing up.
Well, it's showing up for you as an end user. So there are 3 billion people that come to the platform every day. And AI is helping us as consumers find the appropriate content, understand what's relevant. Perhaps we're interested in skiing or golf, or we're interested in baseball, and understanding, how that can gear the right content towards us. And then also tying, big thing for me is commerce. Like I buy half my wardrobe off of Instagram. And so, if you're Grayson, which is a great, clothing brand targeted towards golfers, like Grayson, knows who I am. Like they on Instagram are targeting me all the time. And so I'm constantly buying new things probably I don't need. And it's because they're so targeted in their approach with their ads. And so I just go back to for consumers, you're going to have better content, you're going to have better commerce experiences, you're going to have better overall experiences. For the advertisers, the small businesses that are on the platform, it makes it easier for them to create a campaign. So if you're an interior designer and you own a small store like my wife does in San Francisco, she can create a campaign for a sidewalk sale. We're having a sale on couches, blankets, pillows. And oh, by the way, instead of hiring someone to do a photo shoot and bring a bunch of new photos and videos and music and everything, you hit the button and you upload all the pictures from last year's sidewalk sale, and it'll basically create the campaign for you at a fraction of that human being you'd have to hire to shoot the shoot to drive the advertising campaign. So, I mean, there's already examples of this already working. And they've said this in terms of the Meta AI having an uplift in terms of time spent, Meta AI having an uplift in terms of transactions in ROI for advertisers. I could go on for hours about the experiences that people are having. But again, that's why you're seeing 20% revenue growth. That's why you see a 40% margin. And overall, again, I think the spending is working, and I understand the fear. But, again, it's a fear across everyone, not just.
I'm sure you've heard the saying, birds of a feather flock together. This proverb frequently applies to stocks. A company's competitors may benefit from good news for it and vice versa. Following the release of its third quarter results on Wednesday, Advanced Micro Devices shares fell precipitously. This sell-off may be interpreted by some as a warning sign for Nvidia, the company's main competition. That isn't always the case, though. Instead, did AMD merely provide a compelling argument for purchasing Nvidia stock right away? Now let's examine the reasons behind AMD's stock decline. The chipmaker's Q3 revenue was marginally better than what Wall Street had anticipated. The consensus estimate for its earnings was met. Such outcomes often wouldn't cause a substantial decline in a company's stock price. However, AMD's primary issue was with its direction. Revenue for Q4 was estimated by the corporation to be between $7.2 billion and $7.8 billion. The range's midpoint, $7.5 billion, indicates a 22% increase from the previous year and a 10% increase from the previous one. Analysts, however, had projected $7.55 billion in Q4 revenue. However, AMD's data center GPU business was portrayed in a positive light by management's remarks during the Q3 results call. According to CEO Lisa Su, the business anticipated $2 billion in data center GPU revenue at the start of 2024. It projected $4.5 billion in revenue in July. AMD now projects $5 billion in data center GPU revenue for the entire year. According to Su, for the past 2 quarters, the climate for the data center GPU industry has improved. Some big cloud service providers are expanding the capacity of their data centers, she said. The outlook for 2025 appears promising as well. From everything we see, we feel very good about the market, Su said. Speaking with clients, a lot of money is being spent on attempting to develop the infrastructure needed for all AI workloads. Is Nvidia going to benefit from AMD's prognosis and Su's remarks regarding the data center GPU market? There's a compelling argument, in my opinion, that they are. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Obviously not a good session yesterday, and this morning I'm not sure anything's obvious yet because we're trying to do the old bad is good, but then the question is, do the data really matter that much when they're kind of twisted by one-time events?
Yeah, well, I would not be surprised if we try to get a little bit of a retracement, at least early on in the session here, Oliver, because we got pretty close to a key area of support. The 5,700 level has been an area where we ranged out for a couple of weeks back in September, if you kind of look at it here. So a little bit of a retracement bounce could be in the cards. But one thing that I'm just kind of keeping my eye on here, especially when you're looking at these open interest levels, I moved that negative gamma level to 5,700. Now, we're still from an open interest standpoint, in negative gamma territory, just meaning that there's a lot of pressure on the markets. If we do see, any type of selling pressure because of news events, we could actually see an acceleration of selling activity taking place here. But 5,700 is where we've seen a lot of the positioning or the put flows coming in this morning. Now, if we kind of break through that, 5,620 is still on the radar here. But I also put the MACD on this chart here. We did have that 12 EMA cross below the 26 EMA. That actually happened right before the break to the downside. But that is the first bear signal that you have from a technical standpoint. We're still above the 0 line, so that hasn't confirmed that bearish case yet fully, but it's something to kind of keep on your radar here. And we also have that advanced decline line. It actually was in a little bit of a downtrend, seeing a little bit of an uptick earlier this morning here, but I would look at 5,800 on an intraday basis. 5,800 would be more of the positive area or the area of resistance that was previously an area of support, and then also kind of looking at the 5,750 where we are getting some call buyers stepping in here today.
All right, so in theory, we should have a few decent levels of support pretty close by. Maybe that means at least we hold on for the ride into the weekend. I guess just at least not going down further would be at this point kind of a successful way to end the week.
It would be. So if we're looking at the intraday chart of that 5-day, 15-minute chart, some key areas to kind of focus on here, and I didn't highlight this on the chart, but I should have. 57.35 is actually that area where we faded yesterday, where we hit it and then we dropped around 30 points in a matter of 4 minutes, 5 minutes. So that's your first key area of resistance if you're looking at it from a technical standpoint. And then once again, 57.50. But the ISM manufacturing data has actually been a very bearish data point for us for the last 3 months. So that's something we have to keep in mind. If it does come in line or actually misses the street's expectations and we start getting the stagflationary fear kind of getting back into the market like we've seen over the last couple of months, then we could see actually a reversal. You want to see 5,700 hold. If not, 5,670 is where we are seeing a lot of put flows here today. And I would say the puts are actually kind of outweighing the calls right now, and rightfully so. You have volatility up. You have a lot of institutions that want to try to hedge downside risk. That doesn't mean that we have to go to the downside, but that just means that that's where the positioning is for right now. So 57.35, got to break through that, moving up from there. 57.50 downside, 5,700 has to hold. If not, 57.60 or 56.70 will be your next area.
If AMD is receiving information about capacity expansion from major cloud service providers, you can assume that Nvidia is receiving the same information. Additionally, those cloud customers are likely to spend much more on Nvidia's GPUs if they intend to purchase additional GPUs from AMD. Harsh Kumar, a Piper Sandler analyst, subtly backed up this opinion on the Q3 earnings call by asking Sue a question. Since AMD's key competitor will take most of the TAM total addressable market of the GPU industry in 2025 with $50 billion to $60 billion compared to AMD's $5 billion to $10 billion. Kumar mentioned this in his preparation for the question. Nvidia was the key competitor he was referring to. Sue didn't object to those figures. Nvidia's dominance in the GPU market is shown by Kumar's estimates. Right now, AMD isn't displacing Nvidia in the market. Rather, the market as a whole is growing so rapidly that both businesses are seeing rapid expansion. Crucially, however, Nvidia's rise in the GPU market has outpaced AMD's. That is not likely to alter very soon. Therefore, when Nvidia releases its next quarterly update on November 20, 2024, AMD's projections of increased GPU sales are probably going to translate into even better news. We must take into account a possible flaw before concluding that AMD gave investors a compelling incentive to purchase Nvidia shares. Sue didn't object to those figures. Nvidia's dominance in the GPU market is shown by Kumar's estimates. Right now, AMD isn't displacing Nvidia in the market. Rather, the market as a whole is growing so rapidly that both businesses are seeing rapid expansion. Crucially, however, Nvidia's rise in the GPU market has outpaced AMD's. That is not likely to alter very soon. Therefore, when Nvidia releases its next quarterly update on November 20, 2024, AMD's projections of increased GPU sales are probably going to translate into even better news. We must take into account a possible flaw before concluding that AMD gave investors a compelling incentive to purchase Nvidia shares. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.